Microsoft. It's an absolute titan of technology, right? But lately, its stock has taken a pretty significant hit. So now, every investor is asking the same question. Is this a warning sign of bigger problems, or is this a rare chance to buy a fantastic company on sale? Today, we're going to break it all down using a super detailed report from the investment intelligence platform Fundstill. All right, let's dig in.
So first things first, let's just get the number out there that has everyone talking. A 26% drop from its 52-week high. For a company of this size, that is a serious pullback. And you know, it's enough to make even the most dedicated long-term investor a little bit nervous. This is really the heart of the whole debate.
And that brings us right to the main question of this whole explainer. Is the market sending us a clear warning signal about Microsoft's future? Or, as some folks are starting to call it, is this a garage sale moment? You know, a chance to grab a premium quality asset at a discount. Let's see what the data has to say.
Okay, so to really understand the opportunity here, we first have to understand the fear. Why is the market so anxious about one of the biggest companies in the world? Let's break down the reasons for these recent jitters.
Well, the market's anxiety isn't just about Microsoft. We're seeing this broader shift away from those huge tech stocks, the Magnificent Seven. On top of that, you've got real concerns about the mind-boggling cost of developing AI, worries that growth in their Azure cloud business is slowing down, and just general market stress. That's pretty much the bear case in a nutshell.
But here is where the story gets absolutely fascinating. While the stock price is telling a tale of anxiety and fear, the company's actual financials, they're telling a story of incredible and even accelerating strength. So let's peel back the layers and take a look at the financial fortress that is Microsoft.
Just look at these numbers. While the market is worried, revenue growth is actually speeding up to nearly 17%. Operating margins are phenomenal 46.7%. And earnings per share? They're growing by almost 29%. And maybe the most impressive thing here? Microsoft has beaten earnings estimates for 12 straight quarters, 100% of the time. This data is in a direct fight with a falling stock price.
And to put that profitability into perspective, just think about this. Microsoft's operating margin isn't just good, it is 11 times higher than the median for the entire tech sector. This company isn't just making money, it's an unbelievably efficient machine that turns revenue into profit better than almost anyone else out there.
The Fundstill report really doesn't pull any punches, calling the balance sheet essentially impregnable. I mean, that is an incredibly strong statement, so let's look at the data that actually backs that up.
The numbers here are just staggering. Debt is incredibly low. The company earns enough money just from its operations to cover its interest payments 52 times over. That makes it practically immune to interest rate changes. And the Altman Z-score, a measure of bankruptcy risk, is deep in the safe zone. This is literally what a financial fortress looks like on paper.
Okay, this next metric is incredible. A cash conversion cycle of negative 297 days. So what does that even mean? It means Microsoft gets paid by its customers nearly 10 months before it has to pay its own bills. It is like getting a massive, interest-free loan just to run your business. That is a huge financial advantage.
So beyond the standard financials, the Fundstill platform uses its own proprietary scoring models to get an even deeper read on a company's competitive advantage, its moat. And for Microsoft, these scores, well, they tell a story of complete and utter dominance. This is the platform's trajectory conviction score, and it synthesizes dozens of fundamental factors into a single number. For the last 6 quarters, Microsoft has scored a perfect 100 out of 100. The model is seeing absolutely nothing but strength and positive momentum.
In fact, if you go back even further, it's been a perfect score for 8 straight quarters. According to Fast and Still, this is the highest sustained conviction score for any company in their entire coverage universe. The algorithm is basically signaling maximum confidence quarter after quarter after quarter.
And it's not just that one score. Other key factors just reinforce this picture of pure strength. Microsoft has immense pricing power. It ranks in the top 4% of its entire sector for financial health, and it has one of the most stable core businesses in the entire market, no matter what the economy is doing.
Of course, no investment is ever a sure thing. So to be credible, we have to look at both sides. And the Fundstill report is very clear about the risks and concerns that investors really need to weigh.
So here you can see the two competing stories laid right out. On one side, you have the reasons for caution, all that heavy spending on AI, some risks tied to their OpenAI partnership, and a high valuation. But on the other side, the reasons for conviction, that perfect conviction score, accelerating growth, and that rock-solid balance sheet. This is the core debate for any investor looking at Microsoft right now. So, after weighing all the evidence, the market's anxiety against the company's incredible fundamental strength, what is the final verdict from the Finstill report?
The official rating is a buy. The report concludes that while there are reasons for caution, which is why it's not a strong buy, the overwhelming weight of the evidence points to this pullback being an opportunity. The data suggests the market's fears are really masking the company's true strength.
The report lays out some price targets that suggest some pretty significant upside, a base case of $520 and a bull case of $560. When you compare that to the current price floating around $409, that really highlights the potential opportunity the data is pointing to.
So where does all this deep data-driven analysis even come from? If you're looking to go beyond the headlines and the noise, this is the kind of insight you need.
The foundation for this entire explainer is the research and data from Finstill, which is an investment intelligence platform that provides exactly this kind of deep dive analysis for investors. Honestly, what we've covered here is just the highlight reel. You can read the entire comprehensive due diligence report on Microsoft for free right now on their website at ffinsteel.com.
And hey, if you found this data-driven approach helpful, you might want to follow Finstill to get more of this kind of institutional-grade analysis. So we'll end with this question. The stock price tells a story of fear, but the fundamental data reveals a financial fortress with accelerating growth and a perfect conviction score. Has the market, in its rush to rotate away from big tech, simply gotten this one wrong? The data certainly suggests it might have.